Hello friends, today I am going to talk about PIS, Portfolio Investment Scheme, because most of the time I get this query from my friends that we are NRI, we want to invest in India, tell me how we can do it. So today I am going to tell about this PIS scheme. In previous video I told you why you should have at least one house and some investment in India. If you want to watch this video, you can watch here. Right. So there is a very practical purpose that if you are either a resident or a non-resident or OCI card holder or PIU card holder, you should have one house or some investment in India. That's very important, and that's I explained very beautifully in this video, which I told you already. The link is here. Now, if you want to invest in shares or stocks, how you can do it, that's I'm going to tell you. So let's begin. So hello friend, my name is Arun Tiwari and generally I look after international taxation and NRI taxation also a part of that. So I got generally I deal in such cases where the taxation, legal or investment part is involved for NRIs. So this is very important part. Lots of people don't know about the PIS scheme, Portfolio Investment Scheme. So that I am going to discuss here. So PIS scheme is basically a very simple scheme where any NRI, PIO card holder or OCI card holder, if they want to invest in India, especially in the Indian stock market, Indian security or debt, they can do it through this account. Now, the very simple idea about the PIS scheme is like that: if you want to bring money from abroad, okay, or you want to use the money which is available in India and you want to put that money in stock market, then simply you have to approach your bank. And most of the public sector bank and private banks provide this facility. You just have to ask them PIS scheme or PIS account. So they will open a separate bank account where you can put a money, and then they will open a demat account and they will link this bank account with your demat account. So anytime you want to invest something, you simply have to put some money in your PIS account, bank account, and from there you can execute orders, and all the stocks which you are going to buy will be deposited in that demat account. So it's so simple that all the documentation will be done by your bank, right? So they will ask for documents, and generally it's a general KYC documents they are going to ask, right? And whenever you're going to sell the suppose stocks from there, then only difference will be the first thing, before your net proceed will come to your bank account, the bank will ensure there will be a TDS deducted from it. And you know why they are deducting a TDS and what you can do with the TDS. So basically first thing let me tell you why they are deducting TDS. So they are deducting TDS because you are a non-resident and they just want to ensure that you file your income tax return, and in case you don't file your income tax return, they already have taken your tax in advance. So in case your capital gain is long-term capital gain, that means you are holding more than 12 months, it will be 10%. If you are it's a short-term capital gain on securities, it will be 15%. If it's a debt, it will be 20%. So with surcharge, education says they will deduct TDS and the balance amount will be credited to your bank account, which you can take abroad, whatever account you want to take it, or you can again reinvest. So this is very simple. Now there are certain transactions where you cannot transfer money abroad. So there are two ways you can invest. One is called repatriable basis and second is called non-repatriable basis. Now repatriable basis means whatever you are investing, anytime you can take it away. You don't have to file any form 15 CACB, you don't have to take any approval from anybody. It's as simple as that, investing in any market. So there is no restriction on repatriable basis investment. So if you are investing in stocks, securities, mostly the listed securities, there is most of the income you can take abroad on repatriable basis. But if you are investing in, or you are trading in options, for example, that will be on non-repatriable basis. Another, if you are investing from your NRO account, that means suppose you are receiving a rent on a house, and that rent you are investing using the PIS scheme, you can do this, but you cannot repatriate that. You have to keep it in India. But again, understand, every individual have a limit of approximately $250,000 USD dollar every year they can repatriate by submitting 15 CACB. Right, so approximately 2 crore 10 lakh rupees every year you can, if you want, you can take it. Beyond that, if you want to take it, it's not like it is not allowed, but you have to seek permission from RBI. So first thing, most of people understand, okay, I will invest in India, then my money will stuck, I will not able to take it out. No, it's not like. Only for certain kind of investments, the repatriation is not possible, and repatriation is possible but subject to that limit of 2,50,000 USD dollars. Right, I think you understand that. So PI is very simple, and the good part is that you don't have to do any compliance. You can file your return, of course. Second thing, whatever TDS is deducted, it is not vested. You can file your return. If your TDS is deducted in excess, you can claim the refund, and if it's not deducted in excess, of course you still have to file return, and you can show whatever TDS is deducted as a tax paid. So you don't have to pay separately tax at the time of filing your returns. So all these TDS will be considered as an advance tax for you. So it is not a loss, right? So I think you understand about the PIS scheme. If you have more queries, question about the PIS scheme, how it works, how you can invest, whether somebody else can invest on your behalf, all these questions, please put as a comment section. Only request, don't put your personal data there, because I don't want somebody to misuse that data. It's a you understand, it's a public platform. So if you are willing to invest in Indian securities, stock market, and want to be part of this growth story, do invest and use this PIS scheme liberally. And I will always say that if you don't use money, the money is like, because most of the cases I see, people put their money in NRI account and there they have just get the interest, and maybe interest is tax free. But if you invest that money in maybe stock market, you over the long period you can get a better return. Of course, I am not giving you any investment advice, just I am telling you math. So math is very simple, that if you don't need a money say for 5 years or 3 years, better to put in stock market, wait for that. Definitely you will get better return than the interest on a bank FD. So that's all in this video. Thank you. Have a nice day.